What's up, everybody? Welcome back to another episode of Economic Events. Today I'm going to be reading an article from Yahoo Finance. Fear of stock market dive creeps back as a hedging cost climb. The article discusses rising concerns of a potential stock market decline as various factors create unease among investors. Key issues include worries about the Federal Reserve's plans to raise interest rates to combat inflation, with the possibility of multiple rate hikes on the horizon. This, coupled with uncertainties related to the COVID-19 pandemic, supply chain disruptions, and geopolitical tensions. So those are a lot of points right there. Just to kind of tackle each one at a time is basically with the first one, the Federal Reserve's plans to raise interest rates. Clearly, in the last 18 months, they've been continuously raising rates. I think it was at like the federal funds rate was at 0.25, and now it's at, I think, 5.5. So it's up, over 500 basis points for the last 18 months. So they're assuming that there's going to be more rate hikes in the near future. So that's that one. And then let's see, what's the next one? Uncertainties with COVID-19 pandemic. There are some places that I know we're not in 2020 anymore. We're in 2023, but in some places in the country, they are bringing back mask mandates and other things. So they were saying that the COVID-19 numbers have spiked in the last several weeks. So that's what they're talking about there. And then the next one, supply chain disruptions. I'm assuming this is just going back to a previous issue with earlier in the year and late last year, 2021, 2022, when late 2020, early 2023, late 2022, when in all of 2022, when there was supply chain issues, shortages, all that stuff. So they're talking about that too, could be a possibility. And then of course geopolitical tensions. They're talking about the war in Ukraine, between Ukraine and Russia, and then possible issues with China, Taiwan. So they're talking about those things there. This article highlights how some investors are taking defensive measures, such as moving funds into cash or less volatile assets. In anticipation of a potential market downturn, the fear of a stock market dive has prompted many to reevaluate their investment strategies and risk tolerance as they navigate the challenging economic landscape to strive to protect their portfolios from potential losses. So what they're talking about is, in the stock market, you can do calls and puts. Now, what a call is, you look at, for example, the S&P 500, which they have an index, SPY. So it mirrors the S&P 500. So with that one, you can buy options. And with a call, you expect it to go up. With a put, you expect it to go down. So what they're saying here is, in fact, it says here, let's see, puts it costs 1.8 times more for the options that would be in a 10% decline. Meaning, if you put $100 quote unquote bet into the SPY going up, let's say 10% in the next month or two, then it would cost you, let's just say, $100. Versus if you put in a put or get a put option and anticipate that it goes down, 10% in the next couple weeks or a month or so, then it would cost you $180. So we're talking about $100 for you to expect it to go up, $180 for you to expect it to go down. So clearly, huge discrepancy there. And then it says here in the article, the S&P 500 the S&P 500 index surprise rally 16% this year. So it's up 16% year to date. Do what you want with that information. That doesn't mean it's going to be like that for the rest of the year going forward. It just means that's the fact of what it's going to be, or what it's been as of now. So what does that mean for you? There's multiple things you can do there. You can go ahead and panic and you can sell your entire investment. It's completely up to you. I'm not a financial advisor. I'm definitely not your financial advisor. So you do whatever you want. You can do that. You can continuously buy more and more. The stock market is gonna go up, down, either way, whatever is gonna happen. So it's just up to you to be as prepared as possible for this. Now, you can do certain things to where you can hedge it. You can maybe get into certain commodities, certain stocks that are a little bit more safer in these times. So whether it would be like it doesn't matter about every single thing they listed right here. Like for example, the first one, COVID-19 related pandemic. So we're just talking about that. What are you going to need during to get rid of a virus? You're going to need cleaning supplies. So I don't know. Take a look at this is not investment advice, but just possibly Clorox or Procter and Gamble. So you've got that as an option. So you can do that. Or because I know that those companies, they pay dividends. There's a lot of different things you can do here. Let's just say you don't care if the stock market goes down 50%. You're like, okay, cool. That just means I get to buy more of the stuff that I want at a cheaper price. Awesome, fantastic. Then you just go ahead and keep buying. Or if you're one of those people that you only buy the stocks when they go up, and you decide to cash out, that's completely up to you. And you say, I'm just gonna relax, and I'm gonna wait until let's see what happens in the next few weeks. As the stock market goes up 2, 3, 4%, it means this whole thing was just like a scare tactic or possibility. Which from my experience in the stock market, a lot of times they write these things and it is a little hyperbole there. It's a little added on where they try to make you panic sell, and maybe behind the scenes they've got because this is something that historically hedge funds have done. And this is not, I'm not giving you any breaking news here. This is public information that they've even said themselves, so you can do your own research on that and find that out for yourself. But there's been a lot of hedge fund people who have put hedges against the stock market, and then they go ahead and put one of these doom and gloom articles out there to kind of get you scared, regular people scared, and cash out. It's you got to do your own research to see if that's this is one of those moments or not. I kind of articles like this, I take them with a grain of salt, but I also like to acknowledge it and put it out there just to be ready in case I'm wrong, because I've been wrong before. So go ahead and remember to like the video, subscribe to the channel, make some comments down below. Are you bullish in the market? Are you bearish in the market? Near term, long term, whatever it is. What's your investment strategy? I'm really curious to see.